If you are in the lower 25% of society, you're the ones who go home to areas with more crime. Your income didn't go up for years. You're dying 10 years younger. You have there's more suicide and opioid and depression. The inner cities, the schools aren't working necessarily for your kids. It's become intergenerational. We're not giving the skills they need. And they looked at things that, and they do see, a lot of people getting very rich, but not them being helped. So we should be lifting up all of society.
Jamie Dimon runs the largest bank in America, and his advice on managing money applies to every business, big or small. He's navigated crisis, built a $3 trillion institution, and his lessons could change how you finance your business today.
People look at what we do in government and they say, well, what did you do with the $5 trillion we gave you? And we had very long wars, we had EV companies getting gifts, all these companies getting gifts, but is it helping the rural areas or is it helping the inner cities? Is it helping these kids who aren't graduating high school? So, we should acknowledge those things and have plans to fix them.
Dimon's journey wasn't smooth. Fired from Citigroup, he rebuilt his career at Bank One, then transformed JPMorgan Chase into the most powerful bank in the US. Along the way, he became known not only just for leadership, but for practical, no-nonsense advice on money. Here are the principles every entrepreneur should know.
The way we run the company is we prepare for a full range of outcomes, regardless of what you think. I just think there's a chance that you'll have stagflation. So I'm not saying it's going to happen. I don't want the reader to say he's predicting it. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary.
Dimon is clear. Never run out of cash. Profits on paper don't matter if you can't pay out your bills. Cash is the lifeblood of a business. It gives you stability, flexibility, and power to make decisions.
If you look at economic history, rates have been far higher than this, and they surprise people over time. And I think a lot of the longer term trends have inflationary attributes to them. And so the other thing for your person on TV, credit spreads are low. So you can have two things go against you, which is credit spreads gap out and rates are going up. And so we'll see how it plays out. So I don't want to guess how it plays out. I'm on the cautious side. I'm a little skeptical that we're going to have kind of just an ongoing soft landing here.
Having cash isn't just about keeping the lights on. It's about freedom. With strong reserves, you can hide during downturns, invest when competitors retreat, and act with confidence when opportunities appear. Without it, you're constantly reacting, not leading.
I think you have to separate two things. The economy has been doing well. All the facts, we have effectively been in a soft landing. That does not tell you what the future is going to be. To worry about the future, you have to look at all the things that affect the future, kind of work your way back to the current day. And I've already mentioned huge deficits. We haven't finished quantitative tightening yet. There are huge geopolitical issues. There are these inflationary factors out there. And they have to react to all of that. So I think they're doing the right thing to kind of wait and see before they decide.
Now here's the move. Keep 6 to 12 months of operating expenses in reserve. Forecast cash weekly, plan for slow seasons, and treat liquidity as your number one priority.
Personally, and I don't like making forecasts, stuff like that. I am not a buyer of credit today.
Dimon says borrowing isn't bad, but the timing makes all the differences. The best business raise money when they don't need it, not when they're desperate. When you borrow from a position of strength, you set the terms. You get lower interest, better repayment windows, and more trust from lenders. But if you wait until you're in trouble, banks smell desperation, and the terms will crush you. Borrowing should fuel growth, not survival.
Okay, I think credit today is a bad risk. I think that people who haven't been through major downturns are missing the point about what can happen in credit. And then there will be a huge opportunity for this company too. That's the other thing about downturns. In a downturn, my experience has always been the good companies benefit from a downturn. Not your short-term profits, but your long-term company, and you earn your stripes with your clients in a downturn.
So here's what to do. Build credit lines while your business is healthy. Maintain strong relationship with lenders, and only use that for investment that generate long-term returns.
Risk conscious does not mean getting rid of risk. It means properly pricing it and understanding the potential outcomes.
What was the risk culture at Bank One, and how did you change it?
So when I got there, the way they accounted for it was unbelievably aggressive. So they had less capital, less reserves, less this. They were calling these things profitable. They were basically losing money. Once I found out that, I kind of panicked a little bit. I went through every single loan in the books. I marked them all down, put up more reserves, told the board about it, and then wanted to earn more revenues per dollar of risk. And I always stress tested, and I I showed the board that if we have a recession, and we were about to have one, how much money we'd lose in credit. We probably reduced the balance sheet by $50 billion. And then we did have a recession, but we were kind of okay by then.
Dimon constantly warns against ignoring risk. He believes businesses fail not because they didn't see problems coming, but because they didn't prepare for them. Effective risk management means asking tough questions before disaster strikes. What happens if revenue falls 30%? What if supply chains break? What if interest rates spike? Dimon's success in 2008 came from running the stress test early and building what he calls a fortress balance sheet. Preparation isn't pessimism, it's survival. So here's what to do. Run quarterly stress tests on your business, imagine worst case scenarios, and create clear contingency plans, extra reserve, backup suppliers, or diversified income streams. In 2008, while most banks collapsed, JPMorgan Chase stood tall. Why? Because Dimon had prepared for the storm years earlier. He focused on liquidity, smart borrowing, and risk control gave his bank the resilience others lack. The lessons for entrepreneurs is simple. The businesses that survive aren't the ones chasing flashy growth. They are the ones that bring strong foundations. Cash, credit, and risk management aren't glamorous, but they are the shield that lets you fight another day and eventually win. So here's what to do. Every month, review your finances with one question. If disaster hit tomorrow, will we survive? Build your defense now while times are good. Which of Dimon's lessons will you use first? Cash reserve, smart borrowing, or risk management? Let me know in the comments. And if you want more strategies from the world's top business leaders, subscribe and hit the bell for future episodes.